The whole trade situation between the U.S. and China, it's really taken another sharp turn lately. Lots of you have been asking about it.
Absolutely. It's moving fast.
So for this deep dive, we've pulled together quite a bit of material. We're looking at pieces from Al Jazeera, BBC News via their YouTube channel, The Daily Star, Politico, The Register, Investopedia, and Anadolu Agency.
Quite a range.
Yeah, and the goal here is pretty simple, really. We want to pull out the key bits of info, get a clear handle on, where things stand right now, and maybe explore what could happen next.
Without getting lost in the weeds, hopefully.
Exactly. No jargon overload. So at its core, it's President Trump ramping up tariffs on Chinese goods again.
And China hitting back. Naturally, the numbers are pretty eye-watering. Trump's total tariff rate is now up to 145%.
145%. Wow.
And China's response, 125% on basically all U.S. goods. And this has all happened very recently, like around April 11th, April 12th, this year, 2025.
Okay, let's dig into that tariff jump first. So 145% total from the U.S. side. And you mentioned part of that is specific.
That's right. There's a new 20% tariff that the administration explicitly linked to fentanyl production. That's layered on top of the general increases.
Right. So if something costs, say, $100 to make in China,
you're adding another $145 just in tariffs. It essentially makes it almost impossible to sell in the U.S. market for many goods, or incredibly expensive for consumers.
Okay. And China's reaction, 125% across the board on U.S. goods, effective when?
It kicked in very quickly, just this past Saturday.
And what's the official line from Beijing on this?
Well, their State Council Tariff Commission didn't mince words. They called the U.S. tariffs a violation of international trade rules, and also just a violation of common sense was the phrase they used.
Common sense. Okay. And they're not just talking, are they? There's action being taken.
No, they've gone further. They filed a completely new lawsuit with the World Trade Organization, the WTO.
Another one. What's the claim this time?
They're basically blaming the U.S. for causing global economic turbulence. They argue Washington's actions have sent, quote, serious shocks through the world economy, the markets, the whole trade system.
So they want the WTO to...
are pushing hard for the U.S. to just eliminate these reciprocal tariffs altogether. They want a correction of what they see as wrongful practices.
How's the tone being described? I saw Al Jazeera had someone reporting from Beijing.
Yeah, Katrina Yu. She described the official statements as pretty strong. Seems about right.
But is there any room for negotiation left?
It seems like it. You also noted that China seems to be offering an off-ramp, sort of leaving the door open for dialogue. They're stressing they're still willing to talk.
But there's always a but.
But they're also making it crystal clear that, threats and this kind of pressure from the Trump administration, that's not going to work. It's not conducive to getting a deal done, in their view.
Okay, so tariffs sky high, new WTO lawsuit. What did this do to the markets immediately? Any panic?
It was a bit of a mixed bag, actually. European stock markets opened slightly higher, surprisingly.
Really?
Yeah, but Asian markets were mostly down. Japan's Nikkei index, for example, took a noticeable hit.
And in times like these, investors often run for cover, right?
Right.
Look for safer assets.
Exactly. We saw gold prices surge again, hit another record high, actually. Gold is that classic safe investment when things feel uncertain.
Now, President Trump's take on this was different.
Yes. Predictably, perhaps. He acknowledged it might be a difficult transition, was his phrase. But he insisted investors were very, very happy. He even claimed one recent day was the biggest day in history for the markets.
Very, very happy. Okay. How does that square with the other indicators?
Well, it's complicated. U.S. stocks did finish a pretty wild week higher overall, but analysts also pointed to what they called a flight from U.S. assets. Meaning that record gold price, for one. Also, U.S. bond yields went up. That can mean investors want a higher return because they see more risk in the U.S. economy, and the dollar actually weakened a bit.
So, maybe not universal happiness among investors.
Probably a more nuanced picture, yeah. Not necessarily signs of rock-solid confidence across the board.
And what about inflation fears here in the U.S.? Are those growing?
Definitely seems that way. There was a recent consumer survey showing that people's expectations for future inflation are now at the highest they've been since 1981.
1981? Wow, that's significant.
It is. And it's got some financial institutions worried, raising their forecasts for the risk of a recession happening sooner rather than later.
How does that work? Higher inflation expectations leading to recession risk.
Well, if people expect prices to keep going up sharply, they might pull back on spending, right? That decreased demand can slow down the economy, potentially tipping it into a recession.
Right. And we saw some analysis, I think, from Carl Widerquist at Georgetown in Qatar. What was his take?
Yeah, he expects this trade war escalation will drive up inflation pretty quickly.
How so?
Two things, really. First, consumers might rush to buy goods before the tariffs fully bite, causing a temporary demand spike.
Okay, buy now before it gets more expensive.
Exactly. And second, retailers will likely raise prices anyway, both because of that demand and because they know their import costs are going up due to the tariffs.
So consumers could get hit twice, once from the tariffs directly, and again from this demand surge effect.
Potentially, yeah. A kind of double hit.
And looking at these tariff levels over 100% on both sides, what do trade analysts think about the actual impact on trade itself?
Well, Mara Oye at BBC News made the point that tariffs over 100% are basically prohibitively high.
Meaning trade just stops.
Essentially, yeah. Her view is that at these levels, most of the damage to the U.S.-China trade relationship is probably already done. It's just incredibly hard for businesses to operate or make any profit with tariffs that high. The incentive to trade just evaporates for many.
Okay, so the tariffs are obviously a huge part of this. But it sounds like China's strategy isn't just about matching tariffs. They seem to be doing other things too.
That's a really key point. Stephen McDonald, also on BBC News, was reporting on this. While the tariff war is raging, President Xi Jinping has been very active diplomatically.
Like meeting with other leaders.
Exactly. He recently met Spain's prime minister, and he's got trips planned to Malaysia, Cambodia, and Vietnam.
Countries also affected by U.S. tariffs. Interesting.
Precisely. And it's not just Xi. China's commerce minister has been talking with his counterparts in places like South Africa and Saudi Arabia.
And what about the EU? There were talks about car tariffs there too.
Yeah, discussions with the EU about potentially removing tariffs on Chinese cars going into Europe, maybe replacing them with some kind of base price agreement instead.
So what's the message China's sending with all this activity?
The general interpretation is that China is showing it has other options, other relationships. It's demonstrating that it's not just going to fold under U.S. pressure.
So Trump's expectation that they'd cave quickly, that hasn't happened.
Clearly not. And Beijing has even hinted this might be the last time they directly match U.S. tariff hikes like this.
But they might retaliate in other ways.
They explicitly left that door open, yeah, hinting at other forms of retaliation down the road.
Which brings us neatly to these non-tariff barriers. That sounds like another weapon in the arsenal.
Absolutely. Politico had a good piece on this. China is definitely using non-tariff barriers more now.
Okay, so not taxes, but what exactly? Bureaucracy.
Yeah, things like creating bureaucratic roadblocks, making customs clearance much slower or more difficult, also setting up tricky third-party sales deals that complicate things.
And which U.S. sectors are being hit by these?
Primarily, agriculture and energy exports seem to be the targets. Things like U.S. beef, poultry, and also liquefied natural gas, LNG.
You mentioned they can be stickier than tariffs. How so?
Well, a tariff adds cost, right? It's like a toll.
Yeah.
But a non-tariff barrier can be like closing the road completely. It can literally stop products from getting into the country at all, regardless of price. So yeah, they can be much more restrictive in practice.
Can you give some specific examples of what China's doing now?
Sure. Reports indicate they've simply declined to renew export licenses for quite a few U.S. meatpacking plants.
So they just can't ship their meat anymore?
Effectively, yes.
Yeah.
They've also reportedly raised issues about U.S. chicken products, leading to import holes or restrictions. And as mentioned, they seem to have just stopped importing U.S. natural gas.
And is there a pattern to which sectors are targeted?
It certainly looks like it. These sectors, agriculture, energy, often have strong bases of political support for President Trump. It seems strategically targeted.
Is this a new tactic for China? Or have they done this before?
Oh, they've definitely used these tactics before. It's part of their playbook, you could say.
Like with soybeans?
Yeah, soybeans in the past.
Mm-hmm.
And they used alleged pest issues to restrict Canadian canola oil imports once. It's a known tool.
And it's worth remembering the U.S. uses non-tariff barriers too, right?
Absolutely. The U.S. sugar policy is a classic example, limiting imports to protect domestic producers. It's not unique to China. These barriers can also involve things like sudden, intense inspections causing delays, especially for perishable goods, or imposing new certification requirements that are hard to meet.
Looking ahead, are there other non-tariff threats on the horizon from China?
One major concern is critical minerals. China dominates the global supply of many minerals essential for things like clean energy tech and petrochemicals here in the U.S.
So if they restricted those exports,
It could cause serious problems for those key U.S. industries, a very potent potential lever for them to pull.
okay, this mostly feels like an economic, like tariffs, barriers. But there's another dimension people are worried about, right? Cyber attacks.
Yes, that's a very real concern, highlighted by the Register, among others. Cybersecurity experts are definitely watching this, worried that China might retaliate against the tariffs with cyber attacks. Some are even calling it a potential typhoon attack.
Typhoon attack. What's the significance of that name?
It refers back to previous cyber campaigns attributed to Chinese state-backed groups. Things like Salt Typhoon that hit telecom and government networks, and especially Volt Typhoon.
Volt Typhoon, that was the one targeting critical infrastructure, wasn't it?
Exactly. Volt Typhoon was found to have gained access deep inside U.S. critical infrastructure systems, power grids, water systems, communications. The fear is that access could be used disruptively.
So the capability is there. How likely do experts think it is that China would actually use it in a trade dispute?
Opinions vary a bit. Tom Kellerman, a cybersecurity advisor, was quoted saying, "Cyber is the modern instrument of choice in trade wars," so he sees it as quite possible.
But others are more cautious.
Annie Fixler at the Foundation for Defensive Democracies noted that U.S. intelligence believes China has pre-positioned these capabilities. But she suggests they might be holding them in reserve, perhaps for a more severe crisis, like something involving Taiwan.
So maybe not for a trade stat, but the capability is there, which is worrying in itself.
Definitely a cause for concern. And it's not just state actors.
How so?
We're already seeing a rise in cyber fraud related to the tariffs. Criminals are exploiting the confusion.
What kind of fraud?
Things like phishing scams, pretending to be shipping companies needing tariff payments, or more sophisticated invoice fraud targeting businesses, adding fake import fees. They're getting quite clever about it.
Okay, this is getting really complex. Maybe we should just step back for a second. Remind ourselves, what exactly is a trade war, fundamentally?
Sure, Investopedia gives a good basic definition. It's an economic fight where countries hit each other with import restrictions, usually tariffs, in a retaliatory way.
And it's often linked to protectionism.
Yeah, trying to shield domestic industries from foreign competition. Often they happen because countries just have fundamentally different views on free trade versus protecting their own turf. It's basically countries using economic weapons, mostly tariffs, in a tit-for-tat way.
Were there actual arguments for starting a trade war? Or is it always seen as bad?
Well, proponents argue they can protect national interests, help domestic businesses by making imports pricier, maybe fix trade deficits.
And the arguments against?
Critics say they usually backfire. They hurt domestic companies that rely on imports, they hurt consumers with higher prices, reduce choices, and generally slow down economic growth.
And history has examples of both good and bad outcomes. Or mostly bad.
History isn't kind to trade wars, generally. Think of the Smoot-Hawley Tariff Act in the 1930s. Many economists think it made the Great Depression much worse. We've seen British-China opium wars, earlier U.S.-China tensions. It's a recurring pattern, often with unintended negative consequences.
And from those earlier U.S.-China rounds, did we figure out who actually paid the tariffs? Was it China or U.S. consumers?
Research by the IMF, the International Monetary Fund, looked into that. Their finding was pretty clear. It was overwhelmingly U.S. importers who paid the tariffs levied by the U.S. on Chinese goods.
And they likely passed those costs on.
Exactly. A large chunk of that cost got passed down to American consumers through higher prices. So the idea that the exporting country bears the cost didn't really hold up in practice.
Okay, let's look at the bigger picture again. How determined does China seem in this standoff? What's the message from the top?
President Xi Jinping himself put out a very strong statement recently. He warned against underestimating the resolve of the 1.4 billion Chinese people to defend their interests.
Strong language.
Very. He said they'd never allow any foreign force to bully, oppress, or subjugate us. And he used this striking image of China being protected by a great wall of steel forged by its people.
Wow. And the foreign minister.
Wang Yi echoed that, accusing Washington of putting its own interests above the global system, undermining multilateral trade.
There were also reports about President Trump waiting for a call from Xi.
Yeah, that was reported. But apparently, China has repeatedly refused to set up a leader-level phone call.
Why would they do that?
The thinking is it might be strategic to avoid looking weak, or like they're yielding to pressure by taking the call.
And the potential damage to actual trade flows.
Yeah.
The WTO had a warning.
A stark one. The WTO Director General warned of a potential 80% drop in merchandise trade between the U.S. and China if things keep escalating like this.
80%. That's almost a complete halt.
It's a massive potential disruption, and you have to weigh that against what the U.S. hopes to gain, right?
Yeah.
Trump talks about reducing deficits, boosting U.S. manufacturing, maybe funding tax cuts.
Against the downsides.
Exactly, which could include higher prices for everyone, serious harm to U.S. tech firms reliant on Chinese imports, potential job losses here, higher inflation overall, and slower economic growth for the U.S.
So just to try and pull this all together, it's clearly a major, major escalation.
No doubt about it.
We've got these huge tariff hikes, China responding not just with tariffs, but non-tariff barriers, the cyber threat looming.
Global markets are jumpy, uncertain.
Yeah, and completely different views on what this actually means for the economy long term. It almost sounds like some analysts think the basic trade links are being, well, severed.
That's definitely a sentiment out there, that this is maybe a fundamental break, not just a temporary spat. It's incredibly dynamic, things are changing fast, and the long-run consequences are, frankly, still really unclear. We're watching a potential major shift in the global economic landscape unfold.
Okay, on that note, here's something to chew on. Thinking beyond just the price tags on things you buy. With all these tensions, the tariffs, the barriers, the cyber stuff, what are maybe some of the unexpected ways this trade war could ripple out and affect daily life? Not just your wallet, but maybe bigger geopolitical shifts or even changes in technology we rely on. Definitely something worth considering as this situation keeps evolving.